Okay, so get this.
Mm-hmm.
We're basically time travelers.
Like travelers.
Yeah, our deep dive is going to take us
Okay.
straight to 2025.
Oh, wow.
Not talking flying cars or anything,
Right.
but we are going to be looking at some pretty major predictions
Okay.
for the world in 2025.
Predictions for the world.
Yeah,
Okay.
especially when it comes to AI, energy,
Uh-huh.
and even, a chance of recession.
Mm-hmm.
We've got some financial news,
Okay.
expert opinions,
Nice.
and even some insights into how much energy AI uses.
Whoa. That's pretty cool. It's like we're standing at this crossroads of all these huge trends that are happening.
Wait.
The AI explosion, the global shift to, new energy sources,
Yeah.
and then this big economic question mark.
Yeah.
These are things that are going to shape our lives.
Totally.
Not just the stock market, but, everything.
Yeah, for sure.
Hmm.
First up, the AI boom.
Yeah.
It's like the talk of the town, right?
Yeah, it's everywhere you look.
NVIDIA, the company making those chips
Mhm.
that power AI,
Right.
their stock has gone up 25 times
Wow.
in just the last 5 years.
That's insane.
Yeah, it's like
What is going
the
on?
dot-com craze all over again.
Oh, so you're saying it's another bubble.
It's looking that way, right?
Yeah.
But some experts are saying, whoa, slow down. Gartner, they're a big research firm.
Right.
They predict 30% of AI projects
Well,
could fail by 2025
Why?
because of data problems, costs, and maybe people just aren't sure what value AI brings.
Yeah. Okay.
Plus, AI uses a ton of energy,
Mhm.
especially those AI-powered searches everyone's using.
Oh, yeah, those things are power hungry.
Right. It makes you think,
Yeah.
is all this AI hype
Mm-hmm.
actually sustainable?
That's a good question.
There's this crazy stat,
Yeah.
AI-powered searches can use 10 times more energy
10 times.
than a regular Google search.
Wow.
And if Google itself uses AI for a search,
Mm-hmm.
it's like a whopping 30 times more energy.
30.
Yeah.
That's crazy.
Which brings up a huge point
Totally.
about AI's environmental impact.
Yeah.
We're already trying to figure out
Right.
this global energy transition.
Uh-huh.
And now AI could be putting this
Yeah.
massive strain
Yeah.
on our power grids.
Absolutely.
And speaking of energy transition,
Mm-hmm.
the numbers are mind-blowing.
What are we
We're talking $18 trillion
Trillion.
investment needed worldwide just to cut carbon footprints by 25%
Okay.
by 2027.
That's huge.
It is.
Yeah.
China's got a lead in the charge here,
Uh-huh.
aiming for 40% renewable energy by 2025.
Really?
They're all in on a green future.
Going green.
But for investors,
Right?
the opportunities
Mhm.
are everywhere.
Everywhere.
Copper, aluminum, power companies,
Mm-hmm.
factory automation,
Mm-hmm.
smart cities,
Yeah. Smart cities. Yeah.
even hybrid vehicles.
Wow. There's a lot there.
Think about
Right.
Tesla versus Hyundai
Mhm.
in the electric vehicle market.
Right.
Tesla
Mm-hmm.
with its super high value
Yeah. Super high.
versus Hyundai,
Okay.
a solid company,
Right.
but a more down-to-earth value.
Yeah.
It's investors are betting on the future potential
Interesting.
versus the current reality.
Mm-hmm.
And so it's this choice between
Yeah.
a high-risk, high-reward startup and a well-established company.
Yeah.
Do you chase the hype
Right.
or stick with something proven?
Tough choice.
Okay, let's address the elephant in the room,
Oh, boy.
the R word, recession.
Recession. Yeah.
Several sources,
Okay.
even big names like JP Morgan,
Uh-huh.
are predicting a possible recession in 2025.
2025. Okay.
JP Morgan says there's a 45% chance
Wow.
by the end of that year.
That's pretty high.
That's not something to ignore.
Not at all.
And then this veteran investor,
Okay.
David Roche,
Dave Roche?
he's been around the block a few times.
Right.
He thinks the Federal Reserve won't lower interest rates
Okay.
as much as the market wants,
Right.
which could slow down the economy
Yeah.
and potentially lead to a 20% drop
Bro,
in the stock market.
that's a lot.
And he also threw out this pretty bold statement
What's that?
that the AI sector is in
Heck,
bubble terrain,
bubble terrain.
which, if that's true, could make things even worse.
Yeah.
So AI is driving up the stock market,
Mm-hmm.
but it could also be setting us up for a crash.
Oh, wow.
Talk about a double-edged sword.
Double-edged sword. Yeah.
On top of all that,
Mhm.
there's this whole idea,
Yeah.
a long-term market shift.
Okay.
We've been enjoying this bull market. since 2009.
Right.
The longest one ever.
Yeah.
It can't go on forever, can it?
I mean, history tells us that after a super long bull market like this, we might be heading into a period of, let's call it, a market nap.
A market nap.
Growth might slow down,
Right.
maybe even flatline.
So it's not a guaranteed prediction,
Right.
but it's a pattern
Right.
that we've seen before.
It's a pattern we've seen before.
So is 2025 going to be the year the AI bubble pops?
Yeah.
Will this big energy transition
Right.
be enough to soften the blow
Okay.
if a recession hits? And how does this potential 15-year
Yeah.
market slowdown fit into all of this?
Right.
It's a lot to unpack.
Yeah. That's a lot to think about.
Right.
Yeah.
We're in uncharted territory here.
Totally.
Exciting, but maybe a little scary
A
too.
bit.
So this same veteran investor, David Roche,
David Roche, yeah.
predicts a few things
Okay.
that could cause a bear market.
Right.
And it all kind of circles back to
Okay.
Federal Reserve.
The Fed.
He believes the Fed won't budge on interest rates, keeping them higher
Higher than what?
than what investors want.
Right.
Plus, he thinks company profits will fall short
Okay.
because the economy is slowing down,
Makes sense.
which makes sense.
Yeah.
And then his third prediction for a bear market
Okay.
is a bit more specific.
What's that?
The AI sector.
Okay.
He thinks it's gotten
Right.
too hyped up.
Yeah.
And if it bursts,
Uh-huh.
it could take the rest of the market down with it.
Oh, wow.
So he's predicting a 20% drop
In the market.
in the market
In the market, yeah.
in 2025.
In 2025.
Either these three things,
Right.
and it could even start at the end of this year.
Oh, wow.
So the Fed recently decided
Right.
to keep interest rates steady,
Okay.
and that caused a little bit of panic
Uh-huh.
and kind of fueled those recession worries.
Right, right.
What's interesting is that
Yeah.
this fear kind of led to this sell-off in the market,
Okay.
which was made worse.
By.
Japan raising their interest rates.
Oh, wow.
But then the market bounced back,
Okay.
ending the week
Mm.
with the S&P 500
Right.
down less than 0.1%.
Wow.
So it's like a roller coaster.
It's up and down. Yeah.
Roche still thinks
Uh-huh.
the Fed will eventually lower interest rates,
Right.
but just like a tiny bit.
Tiny bit. Yeah.
And he says that that'll result in
Okay.
smaller profit margins
Smaller profit margins.
for companies
Wow.
throughout 2025.
Yeah. That makes sense.
So it's like squeezing a balloon, right?
Uh-huh.
Something has to give.
Something has to give.
His argument is
What is it?
that for the Fed to lower rates, the economy has to slow down.
Right.
Job markets
Yeah.
need to loosen up,
Right.
and companies will have to make less
Not
profit
profit.
if all that happens.
Mm-hmm.
And it does trigger a bear market.
Okay.
He thinks the Fed will have a lot of tools
Right.
to try and fix things.
Right.
And he says this is because the Fed, consumers, and politicians
Okay.
don't have a high tolerance
Right.
for economic pain.
Economic pain. Yeah.
They're quick to react
Right.
when things get uncomfortable.
Yeah.
So his point is that the Fed won't hesitate
Right.
to cut rates
Cut rates. Yeah.
if things get bad.
If things get bad. Uh-huh.
And they've said as much.
Okay.
Whether those cuts can turn things around
Right.
is anyone's guess.
Yeah.
But it might prevent a total economic meltdown.
Okay.
So the big question is a recession really coming in 2025?
Yeah.
Let's dig into that.
Okay.
So one article we looked at pointed out that JP Morgan,
Okay.
back in August, said there's a 35% chance of a recession
35% chance.
in the U.S.
Okay.
by the end of this year,
By the end of this year.
and a 45% chance
45. Wow.
by the end of 2025.
That's pretty high.
Those are pretty high odds.
Yeah.
It's kind of funny to think that
It's not that.
Deutsche Bank last year
Okay.
claimed there was almost a 100% chance
100%.
of a recession
Wow.
in the U.S.
Okay.
By the end of 2023,
By the end of 2023.
they said
Yeah.
it would be practically impossible
Wow.
to avoid a hard landing
Okay.
for the economy.
Okay.
And yet,
Yeah.
here we are.
Here we are.
Since that prediction,
Right.
the S&P 500 has gone up over 35%.
35%.
It's kind of a reminder
It is.
that these predictions,
Yeah.
while informative, aren't always right. Just because the recession didn't happen in 2023
Right.
doesn't mean
Doesn't mean it's off the table.
it's off the table.
Yeah.
The economy can be unpredictable.
Totally.
And what's important is to understand
Yeah.
that predicting the market perfectly
Right.
is like incredibly difficult.
It is.
The markets will eventually go down.
Yeah.
It's just a matter of when.
When?
No one knows for sure.
Nobody knows for sure.
So if we can't like predict the market perfectly,
Right.
how do we navigate
Yeah.
these potential ups and downs?
Yeah. So think of it like planning a road trip, right? There might be detours,
Right.
traffic jams, You have a plan, but you stay flexible.
Okay, so
One strategy is dollar cost averaging.
dollar cost average.
Instead of trying to time the market perfectly,
Right.
you just invest a little bit
Okay.
at regular intervals, no matter what the market is doing.
So no more stressing about
Right.
buying at the right time.
Exactly.
Just stay consistent with my investment.
Yeah, it's like putting money into your savings account every month.
Okay.
Sometimes you might be putting money in when interest rates are high.
Right.
Sometimes they might be low.
Yeah.
But over time,
Yeah.
it averages out.
Okay.
So the other key is thinking long term. The longer you're invested,
Right.
the better your chances of coming out ahead.
Okay.
Holding your investments for 10 years it significantly reduces the risk of losing money
Okay.
compared to just holding them for 1 year.
So even if there is a recession
Right.
or like a market downturn,
Uh-huh.
I shouldn't panic
Right.
and sell everything.
No, think of it like a roller coaster.
Okay.
There are going to be ups and downs,
Uh-huh.
but if you stay on the ride,
Right.
you'll eventually reach the end.
Okay.
Bear markets, those periods of decline,
Yeah.
they're usually temporary.
Okay.
They tend to be shorter and sharper
Okay.
than bull markets.
Right.
And the market has always bounced back
Okay.
historically.
That makes sense.
Yeah.
But picking the right investments
Oh, absolutely.
still matters, right?
Yeah.
It's not just about like
It's not just about
holding on for dear life.
holding on. No investing in strong companies with solid track records. That's crucial.
Okay.
They're the ones more likely to
Yeah.
weather the economic storms and come out even stronger.
Okay. So it might be a good time to
To check in with your portfolio.
to heck in.
See if your investments still align with your goals.
Right.
Maybe even add some new stocks
Okay.
to give your holdings a boost.
So it's not just about riding out the storm,
Right.
but positioning yourself
Yeah. Positioning
to
yourself.
benefit when the market recovers.
Exactly.
Okay, so looking at all these predictions,
Uh-huh.
what stands out to you?
It's mind-boggling how everything is connected.
Yeah.
We've got AI driving growth in
yeah.
the stock market,
Yeah.
but it's also guzzling energy.
Guzzling energy.
We're in the middle of this
All right.
huge.
Energy transition.
Yeah.
With trillions of dollars
Trillions.
throwing into renewable energy. And then we have this potential recession
Right.
and a long-term shift.
Long-term
What are
market.
the dynamics?
It's like we're at a major turning point.
A major turning point, yeah.
A little overwhelming.
It is a lot.
Trying to drink from a fire hose.
Yeah.
How do we make sense of it all?
I think instead of thinking of 2025
Yeah.
as just 1 year,
Okay.
imagine it as a convergence point
Convergence point.
where these trends, AI, energy, economic cycles, they all
Yeah.
collide
Yeah.
and set the course
Okay.
for the next decade.
That's a great way to look at it.
Yeah.
It's not about
Exactly.
predicting whether the market's going to go up or down,
Up or down.
in 2025.
Right.
But understanding how these forces,
Will shape the world around us.
the world around us. Right. So we can't control
Exactly.
the big picture,
Right.
but we can control
How we can control
how we react to it.
how we react.
So how does all of this apply to us as individuals?
Yeah.
Not just investors,
Right.
but
Think about how AI might impact your work,
right.
your daily life.
Yeah.
Is it a threat,
Uh-huh.
an opportunity,
Right.
or maybe both?
Yeah.
How will this massive investment in energy affect your community, your choices as a consumer?
Okay.
And how can you prepare for
Yeah.
potential economic bumps
Yeah.
in the road?
Bumps in the road. So it's about taking these big ideas and figuring out what they mean for you
For
personally.
you personally,
Yeah.
that's a great takeaway.
I think so.
For our listeners,
Yeah.
it's easy to get
It is caught up.
in the hype or the doom and gloom.
Doom and gloom. Yeah.
But the key is to
But the key is to
understand the trends.
understand.
Make smart decisions.
Make smart decisions, yeah. And remember,
Yeah.
knowledge is power.
Knowledge is power.
The more you understand about
Right.
what's happening in the world, the better prepared you are
Right.
to navigate it.
To navigate it, yeah. So there's this fascinating piece of the puzzle that we haven't even talked about yet.
Okay, what's that?
It's this whole concept of
Yeah.
structural bull and bear markets.
Structural.
Yeah.
Oh,
These are like
right.
long-term cycles
Yeah.
that can play out over like decades
decades. Oh, wow.
and have a huge impact on investors.
Okay.
It's like the underlying currents
Interesting.
that shape the entire market.
Gotcha.
So we've been talking about
Right.
bull and bear markets,
Yeah.
like those upswings and downswings.
Yeah, the short-term ones.
But you're saying there's something even bigger going on.
Yeah, so most investors are familiar with like
Yeah.
cyclical bull and bear markets, the
Yeah.
kind that last a few years.
Right.
But these structural cycles,
Okay.
they operate on a much grander scale.
Okay.
They're driven by like deeper, more fundamental forces
Right.
and can last for decades.
Decades.
Yeah,
So, okay, what's the difference between like
right.
a cyclical bull market, the kind
Yes.
we usually talk about,
Right.
and this structural bull market?
Okay, so imagine
Okay.
the stock market is like an ocean, right?
Okay.
A cyclical bull market
Mhm.
is like a wave
Okay.
rising and falling
Mm-hmm.
due to short-term factors
Right.
like,
Yeah.
interest rates or investor sentiment.
Right.
But a structural bull market
Okay.
is like the tide.
Oh, okay.
It's this like
Yeah.
powerful long-term trend that lifts all boats,
Okay.
regardless of those short-term waves.
But so structural bull market is
Yeah.
like a period of sustained growth
Exactly.
that can go on for decades.
Decades.
And then a structural bear market is
Uh-huh.
the opposite,
Right.
a prolonged period of like,
Of stagnation or even decline.
Okay.
And if we look back over like the last 100 years or so, we've seen 4 distinct structural bull markets
okay.
in the US.
Okay.
These periods of extended growth have averaged about like
Okay.
14.6 years each.
So during those periods,
Yeah.
the market must have seen
Oh, yeah.
some incredible gains.
The average gain
Mhm.
during the structural bull market,
Yeah.
even after adjusting for inflation, has
Yeah.
been over 4 times
4 times.
the initial investment.
So you turn $100
Yeah.
into over $400
Wow. Just by riding that.
just by riding it.
Long-term upward trend.
That's amazing.
Yeah.
But what about those structural bear markets?
They've historically averaged a
Right.
bit longer,
How much longer?
around 15.1 years.
Okay.
And during these periods,
Yeah.
the market can experience
Yeah.
some pretty significant losses on average.
Yeah.
Investors have lost over 60%
60%.
of their investments
Wow.
during these structural bear markets.
Okay, so where do we stand right now
That's
in terms of these long-term cycles?
right.
Are we on the verge of like,
The current bull market
yeah,
began way back in March 2009,
March 2009.
right after the financial crisis.
Okay.
So we're already over 15 years
Wow.
into this bull run, which makes it one of the longest in history.
It's been a great run
It has
for
to,
investors.
yeah, but it has to end eventually, right?
History tells us
Yeah.
that it likely will.
Oh.
And when it does,
Right.
we could be entering
Mhm.
a structural bear market.
A structural bear market.
It could mean a
Great.
long stretch of slow growth or even decline.
So even though the market is like doing well right now,
Do it well.
and experts are
Yeah.
cautiously optimistic about 2025,
Yeah.
we need to be aware
Right.
that a potential shift
The potential shift.
is on the horizon.
Exactly. It's like
Yeah.
we're enjoying the sunshine,
Right.
but we should be prepared
Yeah.
for a possible change in the weather.
Okay, so what can like investors do to prepare for this potential shift?
First, just remember
Yeah.
that we've been in an exceptionally long bull market.
Right.
It's not going to last forever.
Okay.
Second,
Yeah.
be prepared for the possibility
Okay.
of a structural bear market,
Yeah.
which could mean
Hmm.
years of sluggish growth
Right.
or even losses.
So it's not about like
right. Yeah.
panicking,
But about adjusting, like
adjusting your expectations
expectation.
and your investment strategy.
Okay.
Exactly. So if we do enter a structural bear market,
Okay.
you'll need to adopt a more defensive approach.
Okay.
This might mean holding more cash,
Okay.
focusing on those
Right.
high quality dividend-paying stock
All right. Yeah.
discussed earlier,
Yeah.
and being very selective
Okay.
about your investments.
Seems like it's time for a portfolio checkup.
Portfolio checkup.
Making sure my investments are like
Aligned
with my
with your long-term goals
long-term goals
and your risk tolerance.
risk tolerance. Okay.
That's always a good idea.
It really is.
Yeah.
This deep dive has been
It's been
incredibly insightful,
very insightful.
if a bit overwhelming.
It is a lot to take in.
At times,
Yeah.
it covers so much.
Oh.
Like the potential boom of AI,
Right.
the massive shift in like the energy landscape,
The energy land.
the possibility of a recession,
Uh-huh.
and now these like
But now,
even
it's
larger
larger.
market cycles
Right.
that play out over decades.
Over decades. Yeah, it's all connected.
Yeah.
The choices you make today,
Right.
both personally and
Yeah.
financially, will be affected by these forces
In the years to come.
in the years to
I
come.
think that's a great point to like
Yeah.
end on.
And on.
It's been fascinating.
It has.
Exploring all these
It's been fun.
predictions.
Yeah.
But ultimately,
Right.
it's about understanding,
Shaping forces.
shaping the future,
Shaping the future.
and making informed decisions.
Absolutely. And remember,
Yeah.
even though there are potential challenges ahead, there are also incredible opportunities.
Incredible opportunities. That's true.
Yeah.
So one final question
Okay.
for you listening out there. Given everything we've discussed,
Yeah.
do you think 2025 will be the best year ever
The best year ever.
for the stock market?
Okay.
Or the worst?
Okay. Or the worst
Will it be the year AI takes over?
takes over. Wow.
The year we see a major energy breakthrough?
Okay.
Or the year the market takes a tumble?
Interesting question.
The answer is out there,
It is.
waiting to be discovered.
Yeah.
Do your own deep dive
Do your own then.
and see what you find.
Good luck.
Good luck and happy
subscribe.
investing.
Happy investing.